So, welcome everyone. So, this is the part two video about the explaining about the ranges. Okay, so ranges with the examples. So, this is a part with two video how to use that, how to utilize it. So, before going into the video, we will just explain briefly about the part one. So we will recall it. Okay. So we will speak about the ranges, right? So how the ranges will be worked out here. So it came from the higher time frame. So every ranges start from the higher time frame. So when we have the higher time frame key level and we have a higher time frame liquidity, we will look for a candle to react from the high time frame key level, and we will look for a candle to close below the key level, right? So when here the high time frame key level has been triggered, we will go for a lower time frame like H4 time frame. So on H4 time frame, if this is the daily, we will go for a H4. If this is the weekly, we may consider on the daily too. Okay. So if this is the daily, we can go for a H4 time frame. On H4 time frame, if there is a breakout, okay, if there is a breakout level, then there will be the range high will be started. Understand? So this range high was came from where the range high was came from the higher time frame key level. So when the range high will be formed, whenever there is a breakout, there will be the range high will be formed. Okay, after the range high forms, you don't go for entry until the liquidity has been formed. So the next two rules of here, if there is a liquidity, there will be the entry. So if there is no liquidity, there will be no entry. So here we only have a two rules here. The first rule is we need to wait for a breakout. If there is a breakout, there will be the range form. After the range form, if there is a liquidity, then there will be the entry. Understand? So this is the two important rules of the ranges. Once it done, we need to know after the breakout, after the liquidity, after we are taking the entry. So after the entry, if that entry break another structure here, if the entry break another structure here, then another range will be formed. So this is the first range, right? This is the first range, and after the breakout, this here it will be the recent range. Understand? The second range we will call the recent range. So after the recent range, same thing. After here the second breakout will be happen here, right? After the level, the range high was formed. Then if there is a liquidity, then there will be the another entry. So after another entry, if it broke another structure to the downside, then the third range will be formed. This is the third range high. So this is the first range high, this is the first range low, this is the second range high, second range low, and the third range high and the third range low. Understand? So here we will have a three types of ranges. The first range, the recent range, and the new range, right? So the new range will be target for another high time frame level. So every trade we have taken by higher time frame key level, right? So in the new range, when it came to a new range, that new range will reach the target. So within the three type of range, the target will be achieved here. Understand? So always the first range will be the confirm one, the new range will be the confirm one. The second range can be manipulated. You know what the second range can do. So this is the first range, right? So this is the first range. When the first range happened here, so when the liquidity has been taken and it will be breakout, the second range formed here, right? So after the second range, the price created some liquidity here, and we are looking for some entry here. So that maybe doesn't give us a breakout to the downside, and it will go for that highest liquidity, and it's sponsored by another key level. So the second range can manipulate us, but the bias won't change here. You know why the manipulators? Because the breakout structure was not happen. So if there is no breakout structure happen, then that high will be the liquidity. So the price will take another liquidity, then it will give us the big range to the downside. Understand? So this is the third type of ranges. So hope you know understand about the basics of the ranges. Now we will go for some examples about the previous market condition, and we will know how to use these ranges uh, us in the live market, or how we can use it here. So I told you everything start from higher time frame, right? So basically we will start from here. Here you can see what happened on weekly time frame. On weekly time frame, we will have a sweep. So that is only a sweep. There is no key level. We have only a sweep. So what we can consider, the external range liquidity has been taken out. This what we consider, right? And after that, we will go for a daily level. What the daily level brings after the external range liquidity has been taken out, it gives us a sweep, and after the sweep, it provides the daily key level. So here you can see it provides the daily key level entry. Maybe in the next video we will speak about the entries. Okay. So in this session we are going to looking for how we implement the ranges into the market. Okay. So the daily entry has been given. So here we will start from our ranges. So when the daily key level has been taken out, okay, and the daily liquidity also taken. So the daily liquidity and the daily key level, the two criteria has been met. Now what we go for, we will go for a H4 time frame. So on H4 time frame, if there is a breakout of that level, that the range high was formed. That is the first thing. Okay. So let me go for here. So this is the thing where the daily key level has been reacted. Right. So after the daily level has been reacted, we will wait for a breakout level. So what is the breakout level happened here? If you go for a line chart, you can see the breakout was happened here, right? The breakout was happened here. So you can clearly see that this is the breakout level. Okay. After the breakout, what we need to do, we need to wait for a liquidity. So when there is a breakout, that the range was formed. So this is the breakout. So the range was formed here. So this is our range high. You understood what I mean? So this is the range high. Once the range high was formed, the low, the breakout low, right? So that low was our range low. Okay. So this is our range high. This is our range low. Okay. Here, how to took the entry? After the break of structure, if there is a liquidity, there will be the entry. So here you can see the liquidity formed here. So if there is a liquidity, then there will be the entry. So I am taking the entry on the QM level. Understand? So my first entry will be this level, which is the QM level after the liquidity, and my stop loss was above than that level, maybe here, and my target, the first target was that low, the range low. So that will be the first entry. So after that, after finishing that, what we need to do, it will give us another breakout. Here you can see after taking the entry, it will give us another breakout level. So if there is another breakout, another range was formed. So what is the range high? This was the range high. Understand? Now the range high was shifted from there to here. So this is the range high. This is the range low. Understand? So after that, what we need to do, we need to wait for a liquidity to happen. So here you can see we will have a sweep of, here we have a sweep. So when we have a sweep of that level, you know which level? The key level, the H4 unfresh key level, and we have a sweep. If there is a sweep, then there will be the liquidity. If there is a liquidity, there will be the entry. So what is our entry? After the sweep, you can see the V-shaped key level, the A-shaped key level was our entry. Okay. So now the range high was here. And what is our entry? Our entry was from that A-shaped key level. After the breakout level, after the liquidity, when there is a liquidity form, there will be the entry. So this is our entry here. What is our target? The range low was the target. Okay, so this is the second range low. Okay, what I told you, the first range was the first range high and the range low, and the second range was the recent range high and range low. So for the third range, we need to wait for a breakout. So here the breakout happened. So after the breakout happened, the range was formed. This is the range, right? This is the range high. After the range high formed, we will wait for a liquidity. So here that is the liquidity. So if there is a liquidity, there will be the entry. So nearby key level, we have the open close key level here. So what is our entry? This is our entry. So this is our entry. Okay, this is our entry. We can put our stop losses to the above. What is our target? The range low was this level. This is our target. So this is the three ranges. The first ranges was taken from here to here, right? This is the first trade. We have taken that, which is on the first range, like this, and this is the second range, and this is the third range. When the third range has been completed, the daily target was completed. Now we can go for a daily. What we can see on daily, let me delete this all. Okay, so what we are seeing on daily, the external range equity has been taken out. We have a sweep and we have a key level. Okay, so we have taken almost three entries in the three different types of ranges. Now, on the recent, the new range, the third range was a new range. When the new range was completed, here you can see the price came to a daily key level and it will sweep off the previous daily low. So it means it has possible to reverse. When the price came to touch that level, it is possible to reverse. So what it means, within the three ranges, a first range and the recent range and the new range. In the third range, which is the new range, will reach the target. So the daily range was started here, the daily range was entered here. So is it clear now? So after that, we will go for any other examples to find, maybe we can go for NSD USD. So this will be, I have store, I have shared on my channel too, on a public channel. I have shared this idea too. So every ranges start from higher time frame. Understand? So on higher time frame, you can see the external range liquidity has been taken out. The external range equity has been taken out. It doesn't react by any key level. You can see it doesn't react by any key level. Just the external range equity has been taken out. Okay. Now we can go for a daily time frame. On daily time frame, what you are seeing here after taken, we have a sweep and we have the A-shaped key level. You can see clearly the daily entry model has been given. The daily entry was given. So at the same time, what I have previously told to you, is not about the entries. We can find the ranges from here. Okay. So we will start our ranges from here. Now we can go for a low time frame. What we need to find, after daily key level has been reacted, not only a key level, we need to look for a liquidity too. If you ask me where the liquidity, here it is, the sweep is the liquidity. So the first criteria, there is the liquidity, there is the key level, and the candle reject from the key level too. Now we can go for a low time frame, which is the H4 time frame. On H4 time frame, what we are seeing here, you can see there is a breakout. Understand? When there is a breakout level, when there is a breakout level, then there is the entry. Understand? So the daily level was reacted from here. The daily level was reacted from here, and we can see the H4 breakout was here. Understand? So when there is a breakout, then there will be the range high. What is our range high? This is our range high. Okay, so this is the range high has been formed because of the breakout. Then what we need to look? If there is a liquidity, then there is a entry. So here you can see we have a sweep. So the sweep is the liquidity. So here you can see there will be the entry. The open close key level was the entry. So the people can ask me how we can understand the single candle as the liquidity on the real market when we are trading. How we know the single candle as the liquidity? So how you need to use this? You need to use the sessions. So if you can go for, let me show you. Let me cut it here. Okay, so I will cut it here. And if you go for a low time frame on H1 time frame, so what you seen here, you can see the Asia session high was taken out. The London session give us the entry. So this is how you need to find out that single candle as the liquidity and the London give us the entry. Okay, so if you miss that entry, how you take another entry? After, if you are miss that main entry, then you can go for a different time frames like this, H4, H3, H2. So here, after that, we will go for a H1 time frame. So on a H1 time frame, what we are looking here, The another entry has been, yeah. So the another entry was after the H4 level. So the first entry was here. Okay, let me mark it first. So the first entry was here, and we need to put our stop losses on above the wick high, and our first target was, which is that level. Understand? So once that level was finished, what we need to wait for? After that, another breakout was happened. If there is another breakout level, then another range high was formed. So what is the range high? That range high will be the recent range high. Okay. So now we will wait for a liquidity. So after that, the price doesn't give us any entry here. It straightly came to reach the high time frame target. What the target? On the daily level, it came to reach the daily key level here. Understand? So the price came to straightly came into the target like this. Okay, there is no target will be given, and the range start from here, and the range ended from that. Still not we have entered here. Why? Because there is only the key level. You can see still the range not completed. Why? We have only the daily key level, only a key level. So if we get any other sweep here, any sweep here, then we can consider the range will enter here. Still now we can find out the range. How? On a H4 time frame, what is the recent breakout level on H4 time frame? The recent breakout was, if you go for a recent breakout, this is the recent breakout level. Okay. So what the price can do on a higher time frame, if you go for a higher time frame, you can see the price created a imbalance here, right? So we will wait for a daily candle close to confirm that is the imbalance. When there is the imbalance, the price will came to fill the imbalance, and it will sponsored by any key level, and H4 give us a breakout. Then the new range was formed. That new range will target up to that level. Which level? The liquidity. This is our first, then this is our second. So we can continue the range up to this level. Okay. So this is the second. Let me go for any other examples for maybe NST cap. This also we have shared on our public channel here. So let me go for on a weekly time frame. How I take this trade. So on a weekly time frame, same thing. What we have seen here, the weekly has taken a sweep, and it reacted by a weekly key level. So when there is the weekly liquidity, when there is the weekly key level, then what we called as the weekly expansion, right? There is the weekly key level and the weekly liquidity, and you can see the weekly entry also provided here. Okay, so let me go for how to find the ranges. So let me go for a daily level. What we seen on daily? On daily, here you can see same that, yes, sweep and the daily H tape level. Weekly also entry provided, daily also entry provided, right? So we will start our range from here. Why? We have a daily liquidity, we have a daily key level. Understand? We have a two things, a daily key level and a daily liquidity. Now we will go for a low time frame on H4 time frame. So what is the first step? If there is a breakout, then there will be the range form. Understand? So the the level was started here, right? The breakout was happened here. Where the breakout? The breakout was happened on this level. Okay, we have a breakout. So and the major breakout was happened on this level. So here. Okay. Now here you can see it provides a different liquidity. Here also the liquidity, and here also the liquidity, and here also the liquidity. So how you understand which liquidity you will be take out here? So, we have the range high was formed here, right? The range high was formed here. After the range high, the price created the range low here first, then the range low here. So the range high was here, the range low was here. Now, how you understand what key level, what liquidity you need to take? You need to take this liquidity or this key level, or this liquidity or this key level. We have a different questions and different confusion here. So here, what you need to do, you need to know about the premium and the discount level. Understand? So you need to mark your range high was this, the range low was this. When we have a two different level, the range high and the range low. Now you need to mark your fib level above 50%, we called as a premium level. Below 50% was the discount level, right? So if you are taking a sell trade, we need to look for a premium level, right? So above 50% was above than this level, maybe. If you are taking a range high and the range low here, above 50% was on the this level. So you need to consider this as liquidity, and we have a key level on that level. So this is our key level. Understand? So this is the range high, this is the range low, and this is the liquidity, and this is the key level. Understand? So now the entry was here. And how you confirm your entry? You can go for a low time frame on H1 time frame. So I consider that as entry. Now we can go for, so this is my entry here, which is the first level reacted. What I do, I need to know what is the session there. Understand? Now we can see that is the New York PM session. So when there is a session, you need to use the session only the last, after finding the liquidity, after finding the key level. If that key level approaching, if the candle approaching the key level only on the session, the New York PM session or the New York session or the London session, then you can take the trade. That will give you the momentum. Understand? So that was happened on the New York PM session, then it will fall down. Understand? So after that, how to find another range? When there is another breakout, then another range was formed. So here you can see we have another breakout of that level, right? We have another breakout of that level. So if there is another breakout, then there will be the range high, another range high. So here we need to find a liquidity, right? If there is a liquidity, there will be the entry. So here you can see we don't have any liquidity. We have only the H4 key level. We don't have any liquidity. Then many people can ask the doubt how to take this type of entry. The breakout was happened. We have a nearby key level here, but there is no liquidity. What you need to do, you need to switch your time frame H3 and H2. On H3 or H2, there will be some liquidity. On H4, there will be key level. So you can consider H3 as a liquidity and H4 as a key level to take a trade. Understand what I mean? Now we can go for a low time frame like H3. What we can see on the H3 time frame. So here you can see on H3, it provides a single candle liquidity and the key level, which is the H4 key level. You understand clearly what I mean? So that will be the H3 with single candle liquidity, H4 candle it act as a key level. Then there will be the another end. You need to take your entry. So on H4 level, you can take, sorry, on H4 level, you can take your entry by this level. On this level, you can put your stop losses above that. This week high. Then what is your target? The range low was the target, right? So maybe we can put here. So here on H1 level, you can use the session as a confluence. Okay. So whatever trade you are taking here, now what I'm going to do, I'm going to cut here and see what is the session there. So here you can see there will be the Asia session. So the Asia session came to take the previous New York session highest liquidity, and the Asia session give us the entry, and you can see the Asia session give us another entry too, a sweep and the A-shaped key level. So if you miss that first entry, you can take the second entry too. Up to here, we can put our target stop process here. We can put our target to be straight to the low. Understand? So this is how you need to take your entries by the ranges, and you can use the sessions as your confluence. So let me go for now. We can go for an H4 and find what is our another breakout level. So here you can see the target was taken here. So sorry, the target was taken by that level. So when there is another breakout, that another range was formed. So here you can see, for example, there is a liquidity was here. Okay, if this is the liquidity, if this is the liquidity, then where is our entry? Many people consider this is our entry. But why the candle not reacted to that level? Why the candle reacted by that level? What is the reason for that? Because we can consider, we all know this is the trend line liquidity, right? So after the liquidity, why the candle enter from here, not our key level? What is the reason for that? You know what is the reason? When there is, in this situation, you need to switch to higher time frame key level. So if you go for a daily key level, sorry, if you go for a daily or you go for a weekly time frame, so on a daily or a weekly, you can see what happened there. You can see that will be the weekly A-shaped key level. So if the candle comes to a certain high means there is some reason. Without reason, the candle won't come here. Now you can understand on a H4 level why it came to that level. Now you can understand why this level got failed, why the price came to that level, because that is the weekly key level. The price came to weekly key level and it will give the reaction from that and it will start to give her the big impulsive move because that is the weekly key level. You understand here? So everything when there is happening, there will be the certain reason for it. If the reason was not on H4 level, then there is a strong reason on the higher time frame level. If there is no reason on the daily level, then there is a strong reason on the weekly level. So always switch your time frame to understand the thing. So here you can see where we have take a trade. So we have take a trade from the weekly key level and the weekly liquidity. So we have taken the weekly key level and the weekly liquidity. So here the weekly entry was also given. If you go for on the weekly, here is also another entry given. So on a weekly time frame, there was two entry given, right? On daily time frame, if you go for a daily time frame, on daily time frame, the first entry given on that level. There is a sweep, there is a key level, that is the first entry. The first entry given there, right? And the second entry where will be given, you know, after break the structure to the downside and the price uh, taken some liquidity. After taken the liquidity, the price came to take some key level here. Okay, and then there is also another weekly level. So this is the second entry. So the price give many entry here and it finally reached the target, the liquidity. Still, this also another target here. The price can reach this one and this one too. So how to take entries here? We need to go for a H4 level. So on H4 level, what is our recent breakout? This is the recent breakout, right? So this was the recent breakout like this. So we need to wait for some liquidity to take and maybe this liquidity or you need to wait for some sweep to happen. When the price came to that key level, if there is a sweep, then we can consider there will be some range when it gives us a breakout. So we can take some entry and we can target up to low. Understand? So this is how you need to use your ranges as for entries. I have given many examples here. So just watch the video once again. If you don't understand it, and we will give you another video for that. So I will give you three examples. The time was almost 30 minutes, so please watch the video and give your reviews here. So thanks for watching here. Thank you.